Okay, good afternoon, everybody. Andy Pizarraza here with Special Effects Academy, and we're getting started on our start of the week session for August 5th, 2018. Without further ado, our usual agenda, we're going to take a look at the prior week on both long-term and short-term accounts. We're going to take a look at our currency strength meter, the fundamental announcements coming up for this week, a little bit of a look at the charts, the daily charts for the major pairs, any setups we see in progress, and our parting words. Coming up on the screen is the long-term account. As usual, I highlight the trades that were opened or closed during the week at the bottom. We did finally close out that old euro pound trade from May 11th. So that one was opened 6 months. Ended up with about 100 pips profit. It also opened about 2 weeks ago. So overall, we added a few pips on the long-term account. We're only carrying one open trade at this time, a USD CAD short that was open towards the end of last week. All the other trades have been closed out. Year to date on that account, we're at 37.67% profitable, and you can read it or see it on the video. But there's the dollar profit based in particularly bad week. We have gone into a recovery extended. Catch here with me. Not sure. Or not. Doesn't seem. Okay, I'll carry on and assume that that will catch up at some point. On the short-term ledger, as I said, we did have a very nice recovery week. We had a growth. Okay, so that's why it just kicked me off. Bear with me 1 second. I will recover that. Okay, we're back, and you're now seeing the short-term ledger. As I said, we had a growth of 6.17%. 171 sites that were actually open. I always try to make that you don't need to be right more often than wrong. You just need to manage the trades adequately, and you will see that growth. So we added that 6.17%, nicely canceling out the downtick that we had the prior month. And we have two trades that were left open. When you see at the bottom, a euro pound long and USD JPY short. It was a heavily fundamental week, though there were also opportunities that came out of the technicals. It was a nice recovery, as I mentioned, this 1 week alone covering the shortfall for the entire month of July. We did start a new approach on the account due to the changing market conditions last week, moving to more of a medium-term outlook. And as I mentioned before, kept two trades open on this account over the weekend, euro pound long at half a lot position size, and a USD JPY short at 0.2, a fifth of a full lot position size. Our relative strength meter for August 5th, and this will look at the week that just ended, is here last on your left side. We're going to focus on this last week, the week that just ended. We see the Aussie on the road. It gained against some, lost against others. The Canadian was the overall winner for the week, and this is mainly based on the oil price rising. That always gives the Canadian dollar a boost. The Canadian is heavily dependent on oil as a good chunk of their economy. So that's the Canadian right there, clear winner. The Swiss was also a clear winner and gained on every other currency except the Canadian. The Canadian, as we mentioned, gained a little bit more. But overall, the Swiss had an excellent showing. It gained strength against every other currency out there except the CAD. The euro was a loser for the week. It did gain against the pound. The pound was the overall loser, of course. It did gain against the pound and the Kiwi, but it lost ground against all the other currencies. The pound, as I mentioned, the overall loser, lost ground against everybody else. The yen was middle of the road, gained some, lost some. The Kiwi overall lost against everybody except the pound. The dollar gained against everybody except our two clear winners, the CAD and the Swiss. And silver and gold there at the end. Silver having a middle of the road, and gold was also a clear loser for the week. So that's our relative strength meter. The only thing we can add to that is we can see the volatility in the market, 1.19%, 1.33%. It's pretty much holding steady. So we're having movements a little bit above 1% gain or loss in the currency market now for 2 straight weeks. Moving on to the fundamental announcements for this week of August 5th. We have a very now it is full of interest rate decisions. We're going to have the Reserve Bank of Australia on Monday night midnight, so technically it's at 12 p.m. on Tuesday morning. We will be trading this one live, so we'll day, but I will be opening the trading room. I'm sorry, I see my audio left. What was the last thing you guys heard?
You mentioned about opening the trading room at some point.
Yes, indeed. At some point is going to be 15 minutes past midnight Eastern Daylight Time to trade that Reserve Bank of Australia interest rate decision. Not that I expect them to change the rate, but it's always interesting to trade the rate decisions. Same thing with the Reserve Bank of New Zealand. That will be Wednesday afternoon. That will be at 5 p.m. So we'll open up the room around 4:30 p.m. on Wednesday. And as a result, we will not be having an 8 p.m. session that day. So Wednesday, 8 p.m. canceled. It will be replaced by the afternoon session with the Reserve Bank of New Zealand. We have a monetary policy statement coming out of Australia, so 2 Australians this week. And that one will also be traded live, and that one will also cancel the 8 p.m. session for Thursday. So we'll be opening up the room around 9 p.m. for the BA monetary policy statement. And last but not least, we do have, we have the GDP coming out of Great Britain or the UK. I'm not going to be trading that one live, 4:30 in the morning. We have the CPI excluding food year over year out of the US at 8:30 a.m. We'll be here because I will be trading that Canadian net change in employment at the same time, 8:30. So that one will be traded live as the Canadian equivalent of on payroll. And since we're already there, well, if anything happens with the dollar based on the CPI, we might as well trade that as well. So Friday morning, 8 a.m., I will be opening up the trading room to trade that Canadian equivalent to the non-farm payroll. And as a result, we'll also cancel the noon session on Friday. And same as we did this last week, and simply wrap up at 3 p.m. for the end of the week. So very interesting, very high impact fundamentals coming out. 2 interest rate decisions, and a non-farm payroll equivalent out of Canada. So actually 4 interesting ones coming out. 2 interest rates, the monetary policy statement, and then the unemployment, net change in employment and unemployment rate out of Canada. I will make sure that the entire calendar is sent out in the summary email later today. You guys will have that very early on in the week for all your planning, and of course, we'll send the usual reminders out as we go through the week. Moving on to our major pairs, so looking at the euro dollar as usual as our first pair, and these are all going to be daily charts. We can see that the euro dollar is in a sideways pattern that's been ongoing since sometime in May. It does have wild and wide swings, so it's not that there's no money to be made, but it is to trade when you're in a sideways market, which we can take advantage of. On the daily, we see that it is very sideways. The pound dollar, much the same thing, though the pound dollar has a lot more weakness in it than the euro dollar. So we can see that it overall has been making lower lows as it goes along, or you would be able to see, there we go, the screen has updated. So unlike the euro dollar, the pound dollar is making lower lows, lower highs consistently. So while it has been sideways for about a month now, it's sideways with a tendency to drop, and that is still ongoing. I do expect the pound to continue exhibiting weakness based on the situation on the ground over there. The USD JPY, and I'm going to continue on, the screen will catch up at some point. Obviously, it's a little bit slow today. There we go. But that's the last comment. I'll assume that the screen is catching up and continue with the talk here. So USD JPY definitely continues moving higher into dollar strength against the yen. It did make a bit of a retrace attempt in the last couple of weeks that has bottomed out and now seems to be heading back towards the top. It has breached the trend line. Likely there will be some downward action before a resumption of the upward movement. I am long-term bullish on the USD JPY. I would expect it to continue heading up, but short-term we may be in for a bit of a sideways market or even a bit of a retracement before it gets its next uptick. So we'll be looking for those opportunities. Actually, we already have a USD JPY trade open in the short-term account, so we're short on this one already. USD Canadian, and this is, I think, a long-term trade that we have. Yes, indeed, this is our long-term trade. The USD CAD, as with all the CAD pairs, has gone into Canadian strength based on the rising price of oil. On this chart, we can see that it has breached a inner trend line, and it is making its way towards the outer trend line. If that test succeeds and actually breaches the outer trend line, we have a nice opportunity for a bigger drop. And that's about all I'll say for the Canadian for now. USD Swiss, this is a very interesting pair for me. I use Swiss to get a little bit of strength months, since it does seem to bounce between the parity level, $1 to 1 Swiss, and down to around 0.92, 93, 94 per dollar. And it is overdue for that, that swing trade. So I'm eagerly looking forward to a break of this sideways pattern that we're seeing right now. When that support fails and this starts going down, that is going to probably make our month, whatever month we're in at the time. So keeping an eye on that one. It has to be played very carefully. We don't want to try and anticipate it, but we will be getting into shorter term trades in that direction. And then one of those eventually is going to turn into the big move. So stay tuned for that one. Moving on to the Aussie dollar. This is another dollar pair that is stuck in sideways pattern for more than a month now, actually 2 months at this point. So it's been stuck since the beginning of June in that sideways pattern. And while there may be short-term trading opportunities on the long term, it's simply doing nothing. New Zealand dollar, same thing as the Aussie dollar, stuck in that 2-month-long sideways pattern. Probably good short-term opportunities at some point, but nothing on the long term. The Aussie Canadian, and this is going to be indicative of all, or representative rather, of all Canadian pairs. We're seeing Canadian strength returning to the market. On the Aussie Canadian, currently testing a prior low, a low made around the beginning of May. It's right there at that level of support. We'll see if it has enough strength to pierce it, in which case we are definitely going short on this one. So we'll wait for the right moment and the right entry signal. The bias is definitely for a short. On the Euro Swiss, again, the Swiss is overdue for a correction into Swiss strength. We can see that playing out here already on the Euro trend, and it is making its way down towards the level of support that is still about 60 pips away from where it is right now, so not the biggest distance. But if this one continues moving into Swiss strength, and with the problems, this is another pair that will likely start getting us great opportunities. It gave us all the way up as well as all the way down before we fitted this one in both directions. So we may do for another massive on this. Euro pound, what can we say? The pound is weak, the euro is weak, the pound is weaker than everybody else. So even against the euro, the pound is making its way up. We are a medium-term trade going long, so we're expecting their high around 0.896, which is this dashed line that we're seeing towards the top. And that's the direction we're trading at. We do not have a limit. We'll see how far it goes and take our profit when we can. And I've been kicked off again. I'm sorry. The internet today is not being the most cooperative, so give me 1 second. I'll again reattempt to recover that. Okay, screen should be coming back to us, and I am looking at the Euro JPY. I'll give it a second for the screen to actually come up. The Euro JPY is in a downward sloping channel, very, very small angle, so it's not going down quickly. However, it is swinging with very wide swings. So we can see that some of these movements are simply 500, 600 pips at a time over the course of about a month worth of trading. So we want to latch on to one of these bigger moves eventually, and this one may indeed be it. If I see that it is consistently heading towards the bottom, we will try to trade that for about 300 pips this time around, perhaps more if it continues keeping an eye on. Onto the Euro Canadian, nothing here that hasn't been said before. The Canadian is gaining strength, the Euro is not, and this chart is heading towards the bottom at an ever faster pace. So we will be trading a lot of these Canadian pairs as soon as we get the right entries throughout the week. And of course, we have to be careful on Friday when we have the Canadian equivalent of the non-farm payroll. That's when we will be making sure that we don't give up any of the profits we've captured, assuming we've captured some on the Canadian pairs. So highly interesting pair, the Euro CAD as well as the others, but more on that as the trading week commences. Pound JPY following a channel. It is going towards the top of the channel right now, doing a re-entry, still with a downward trend, but in general for the past month, 2 months, it has been really in a sideways pattern. So it's been in a range of about 200, 250 pips going up and down sideways. And we, of course, may try to take, and indeed we have taken some of that over the past couple of weeks, and we've lost some pips to it as well. But I would be looking for sideways. Since that band is so wide, we may start trading the channel bounces on the smaller time frames. Aussie JPY, is not having a good year, and actually since the in a bear side channel. That channel is also, and we'll see if we can take some profit out of it, as we already have. So we'll continue trying to make some safe profit as it bounces between the channel walls. Euro New Zealand has been sideways since the end of June. No real change there. It's at the bottom of its sideways channel. I've been waiting for a breakout in either direction. Actually got faked out in one of those, and it's looking like it may give us another opportunity very soon, maybe even this week. If we do have a break towards the bottom, it's got about 500 pips to give us, and I definitely want in on those 500 pips. Pound Canadian, again, not much more we can say other than the pound is very weak and the Canadian is getting stronger, and that's what we see playing out here. So this is another one where I expect to have some very nice trading opportunities between Monday and Thursday before we have to exercise some caution on Friday before the Canadian employment numbers come out in the morning. And that is it. Those are the pairs on the daily that we're covering. We have the setups in progress. I made some crib notes here. The USD, it does seem to be slowing down and eyeing the landscape. The landscape. There is a lot of uncertainty in the U.S. markets right now. There's a lot of bullish news and there's a lot of bearish news. So the news is mixed and the market does not like that. So the dollar can go in either direction in the short term. Have to trade it cautiously. On the flip side of that, most of our gains and the movements are always going to be on the dollar pairs. So this is one of those damned if you do, damned if you don't moments where we're going to still have to trade the dollar regardless, simply because that's where the money is. But we have to be very careful how we do it. The euro pairs, they're starting to look like very good opportunities from medium-term trading. Directional, I am bearish on the euro itself, but we will see bounces up and down because some of these euro pairs are trapped in sideways channels. When it does break, my bias is for it to be breaking into euro weakness, but that's simply my bias. We will trade whatever the charts tell us to trade. The pound pairs, this is not a bias. The pound is just in the crapper. There's no gentler way of putting it. It is overdue for some good news, but none seems imminent. So I would expect the pound to continue having issues, continue going down at best. If things turn for the better for the pound, it will stay put. I don't see the pound gaining strength anytime soon. At best, it will be sideways, and at worst, it's going to drop even further. I'm banking on dropping even further, so I'll be very eager to look for opportunities to trade the pound down, especially against the Canadian. We'll get to that one. The Swiss pairs, we see the Swiss is at its historical limit, especially against the dollar, so I don't think it has any room to weaken any further. I'm expecting a reversal into Swiss strength at any point, but I don't know if that's this week, next month, in 2 months. It's whenever it wants to do it. So we'll look for the right entries. We'll take as many of those proper entries as we can. And one of those, I guarantee, will be the big move, but there's no way to predict when exactly that will happen. And last but not least, the Canadian pairs. They're the most interesting to me right now because the Canadian dollar is getting that boost thanks to the oil market. We have to play that for all it's worth, especially playing it against weaker currencies like the euro and the pound. Not necessarily the dollar, though we're in the longer term dollar trade in that direction, but again, longer term. For the short term, the euro and the pound are going to be the much better currencies to trade against the Canadian. Just banking the weakness of the first two against the strength of the latter, and we should see some very decent trading opportunities. And that is it as regards the analysis. Just to wrap up, it was definitely a very nice recovery week. We had a shifting market which forced a reassessment. That reassessment is not a case of panic. Oh my God, what are we going to do now? Look at that. No, this is part of our trading plan. Markets will always change, and we need to change with the markets. You need to have a trading plan. You need to know what to do if things suddenly change. Don't be the trader that's just married to a system long after the system stops performing. You need to evolve. You need to adapt. That's the secret of being a successful trader, and that is a core part of what we teach as well as what we apply. We live by our own rules. And that's it. That is, those are my parting words for today. Of course, any Q&A, any questions from anybody, feel free to jump in at any point. And my apologies for the technical difficulties. Luckily, they weren't very long-lived. We recovered within seconds each time. So all in all, apologies for the inconvenience, but seemed to work out well. Now I'll shut up. Anybody have anything? Anybody still hearing me?
Yeah, we can hear you just fine, Andy. Just,
Awesome. Good to know.
Technical difficulties were kind of it's all right, but
Yeah, they were quick this time. I've had technical difficulties where I had to cancel the call and come back in an hour. So this one was reasonably mild.
yeah. Other than that, I really have no questions, but just looking at the charts right now, nothing much going on as usual on Sundays, or yeah.
Yep. First trading day is usually slow, but it does give you an idea of what's going to happen. All right.
Yeah.
Thank you, Miguel. Anybody have anything else? Okay, then in that case, it has been my pleasure, and I will talk to you guys very soon. Take care.